All right, so we are recording and live, y'all. All right, can y'all see the screen? Perfect. All right, so first things first, before we go into any kind of trading, I always want to pull in our higher time frame. So that's why I've got the 4-hour pulled up here on NASDAQ. And our focus is going to be making sure that we understand from a direction where NASDAQ is going, because I want to take a higher time frame influence before making any kind of trades. So first thing I know, I'm pulling up the market structure. And with market structure, we had this last high, and this last high got broken by a candle body. So at this point, I have an anticipation that the market's going to make some type of move to be corrective. And then the market's going to go up from some type of space to go up. And my hope is that it would go past this high. But not thinking too far ahead, my first inclination is that we're going to go down. And so I'm looking for zones and areas in which the market can possibly bounce from. So I treat this whole thing as one leg up. And so from looking at that leg, I'm going to say, okay, I'm going to pull this zone right here. This would be a demand area that I'm interested in. This one's high up the leg, so it's not something I really want to take in consideration too. But remember, I'm looking at my premium and discount. So if I treat this whole leg going from here all the way up to here, this is anything right here between this 40 and 60 is our relative equilibrium. Anything below it, that's where ideally I want to get involved. So right now, I've got the only zones that I really want to pull that I'm really interested in. And so now I am going to speed up to the London market, because right now we're at the beginning of last week. So right in during the Asian session, and it's not typically a time that I like to trade too much. So let me go ahead and speed up. And for those that remember, we had a really big drop that came down here market-wise. I forgot what, it was something related to news of the war. That's what caused that big drop. So we get essentially a really nice pullback on our 4-hour, and also enough for us to give us some place to consider entry. So it being that this didn't come all the way down right now to this zone, I do want to pull and see what if I find anything in this area. So I'm gonna actually drop down to the 1-hour. And the 1-hour, I have another pretty good demand zone that's priced pretty well. So I'm going to mark out this demand for H1. But now I'm going to go back to my M15 and see what I see. So we are still in, we're still in the Asian session right now. Not really want, like I said, like trade too much. But something I noticed, something I'm seeing here is I'm paying attention if this high gets broken, because then it will go to give me entry to get involved. I mean, it possibly could also mean that price either didn't come back to our 1-hour zone, because I'm looking at this large wick right here, and this shows me that there's something in this area I now have identified either from the 1-hour or the 4-hour that is showing that there's a large sign of rejection. So this could mean that we have bullish momentum that's about to come back into the market. So we're gonna play this out and see what happens. So speed 2.
I think so Euro did the same thing with this big candle, and like I use Oanda, and on Oanda we got a really big candle. Something to keep in mind is when you get a big candle like this, in a lot of other brokers, it is a gap between here and here. And the general rule of thumb is that most of the time you can see half of the gap filled before a continuation. Yep. I don't know if you guys pay attention to that stuff or not, but in my back testing anyway, I found that a lot of the times at least half of the gap gets filled.
Yeah, no, definitely. So it's something definitely that we know the gap is probably going to be filled at a certain point. So I'm still looking at this high. This is an area where I kind of want to try to get involved if I can. So let me go ahead and speed up and see if it comes. Now we're coming into our right here, and I have my time on my time. So this is where we put ourselves right near the Frankfurt Open. So just want to clock out one more candle. All right, so this is right here at the Frankfurt Open. I'm seeing that the market is making a move down. essentially I do have enough to have a 15-minute chalk if I wanted to go ahead and start buying. But I'm going to go ahead and wait until see what we get into the London. But I'm definitely seeing, looking at a buying impulse right now. So we got more momentum coming into the market, higher volume, also something else that I pay attention to. And bam, I got what I was looking for. So now I have had my 15-minute chalk where I really wanted to pay attention to. So yeah, so here's the chalk I'm looking for. Now, what I'm going to do is just mark out a couple of places where the market could come back into. So I'm looking here at this demand zone because this ultimately was probably the last candle before it ended up coming to break. And so I consider that as a demand that I'm going to watch. So from a demand of 15 minutes, I also could look at this area here. And here's another demand for a 15-minute. And the whole thing, I'm treating it. I like to use my fib tool going down from the last pulse leg all the way up here. You'll notice this one's in relative equilibrium. This one's in our discount. So it's areas that I'm interested in looking to really get in the market. So let's see what happens. Haven't got a touch yet, so nothing to pay attention to just yet. All right, now I got something interesting happen. We have a wick break above this high, so we have yet another what I would consider BOS. So it's broken this like internal structure. So I'm also going to put a zone to watch this area right here. Now, it's just a wick break, so it's something to keep in mind. It's not exactly a body close. No, I don't do buy to sell or sell to buy wicks. I don't do those. I just in my back testing, I just haven't found that it generally got me on the right side of the market. So it's not something that I usually pull from. So let's see if we get a tap in. We do. So now at this point, it's tapped into my higher time frame POI that I'm paying attention to. And I know I'm going with my bias, which is going into a buy. So now at this point, I'm going to hop down to the 1 minute and see what we can find. So coming down here on the 1 minute, what am I looking for exactly? I'm looking to see it make a chalk. So I'm gonna pull this supply zone. And the reason why is if you look at the way that the candles moved, we have a wick, and then it had a small pullback, and it came down here. So essentially, that's the low. This would be the last lowest point before it made this low. So this is the high that I need to see broken, and I want to see it pull back into my POI for me to look to get involved in this. So let's see what happens. And I'm also watching to see if it comes past this low too. All right, so we got a break right here. So this would be, an example of my 1 minute chalk that I'm looking for. Now I'm looking to now get involved somewhere. So I look at, see this zone, I see this. I'm just going to pull this whole thing because it already encompasses this zone. It's a little bit bigger zone, but my focus is that I want to make sure that I pull it both and consider it instead of just coming here and let's say price decides to take this and just go down to this low. You could already be taking a little bit out the trade. So right now, wrong tool. I'm going to pull this. This is my area that I'm watching. All right. Okay. So spread on NASDAQ is actually pretty low. It's a good thing. So I put it a little bit higher back just because I don't want anything to like barely tap and then go. So I have a little bit wider stop. It's about 20 points. And so then I have it right at just 1 to 5, watching for it to take our first partials, and then we can write the let's go to, since we're going in the 4-hour high. So let's see, get a pullback into it. All right. Whoa, so close. Pull this out just a little bit. All right. All right. So we got tapped into our order right over here. Barely came. We're still in this trade. So let's see what happens from here. All right. So at this point, we're floating almost about half. I have a little tool that I use to see. So, all right. Price is moving up. Let me make this a little bit wider. And so now we're in this kind of period where price is waiting before it goes into the New York session. So before the New York session, it's still got like relatively good volume, but it really picks up when we get to our time frame right about the 7:30, about 8:30 is when the market opens in my CST time. If that, I'm trying to think of what time that is in UTC, but basically 8:30, it's somewhere around 2:30, 3:30 UTC. That's where we start seeing the market really move. There's a big jump in volume. So keeping that in mind right now, that's what I expect to see for the market. So make it a little bit faster. All right. So we hit our first place where we're taking partials. So at this point here, you want to take partials. And there's two ways I like to do my management when it comes into my trade management. It's either if I truly believe that the market is going to shows a strong impulse, I won't take like a majority partials. I'll just take enough to cover my stop loss so I can keep my stops open. So at this point, if I wanted to do that, we're at 1 to 5 risk reward. So I could take off 20%, and that will allow me to cover the stop loss. And then I can keep my stops open and target a 4-hour high. If I'm targeting an M15 high or low, and I don't have like such a large target that I'm looking for, what I'll do is then at that point, I will take out, for instance, maybe 80% and then leave the rest on for a runner to go to like a higher target. So depending on how you look at your trade management, there's multiple ways that you can do this. So right now, I'm gonna go back to the 15-minute, and actually I'm gonna go back to the 4-hour. So
hey, Brian.
Yeah.
Quick question. So you're saying that you want to keep your stop loss open, but once you reach 1 to 5, you would like to take 20% in order for you to cover the stop loss, right?
Correct.
Perfect. Okay, cool. Thank you.
Mm-hmm. So wait, where's my trade though? Hold on a second. Okay. So just to keep in mind, there you go. So keep it in mind, this was our 4-hour high right here. So I'm just going to label this really quick. I think this is our 4. So that was our 4-hour high. And if we continue towards that, that would give me about a 1 to 10 risk reward. But it also coincides with our 15-minute high. So ultimately, that's where I'm looking forward to take our profit.
And that is a weak high, right?
That's correct. Yep. So on the 4-hour, it made a high and it didn't come down to break this low. So therefore, the high is weak and we expect the low to be strong. So also something else happened at this point too. We also had another wick break above, and I pay attention to these things. So it's not exactly a structural BOS, but it's definitely something I pay attention to. Wait, let me turn off the BOS part. So I pay attention to this break. So now at this point, one, we already have a trade where where we've taken off the risk. So at this point, if price decides to come back down and it comes back down into this area, I'm looking to take another buy. So I'm going to draw a demand zone right here because it breaking to the wick means something specifically that I want to pay attention to. So, all right. And I'm going to adjust it to right here. So let's see what happens. All right, price taps into it. So we're going to go down and see what we can get on the 1 minute. Now, we're already good. We already have floating profit here. So we see a strong 1 minute wick. So that definitely means that there's something that the market is pushing back from that we need to pay attention to. So let's see how we can get involved if it gives us the right opportunity. Right now, the high that I need to watch for is this high right here. If it passes this, then that's what I would consider for us to have our chop, because this is the last supply that broke. Last supply that broke this small demand right here. So I'm gonna put the candles out just a little bit. All right, we're going to keep going. Is hovering right above our POI from the 15 minutes. So that to me means that it's showing a consolidation. So it's definitely, I'm looking, there's going to be some type of move in some direction. And it's definitely a place where I'm interested. So I see wicks. All right, cool. At this point, we now can update our spot for our chalk, because it came down and it broke using wicks to this area right here. And we're also getting really close to the New York Open as well, too. So it's something else to keep in mind. So now at this point, I'm looking for where's my zone that I'm looking to see it break. And right now this is going to be the high that it's got to break. It's got to break over this high for me interested. I don't really pull the inside bar. And some people may consider right here that say, okay, this might be the spot right here. I don't always pull the inside bar. I like to see it very visually that I know, hey, this is a colored candle in a certain direction, in opposite direction. So I know that there was some type of battle. I do pay attention to the wicks, because if you look at the wicks very carefully, this looks almost the same. Let's see. Below here, I'm looking at this spot right here where I look at open, high, low, and close. So 13,998.0, 13,998.0. So they're both the same. Depending on your broker, it might be different. But there's other things that I look at. Is also paying attention to what happens in the wicks too. So we're going to let it go. And we're going lower. Oh, good. Something else happened. So we got a wick break below. And I always say, pay attention to the wicks. So it broke right here again. So that means now that this little area right here, this little doji candle represents the last supply that ended up breaking past this wick. So now I'm updating where I'm paying attention to for my chalk. So now if it breaks this high, then I'm looking to get into the market. All right. So we ended up going lower, but we also ended up breaking higher. So essentially, all of this is area. Now, you could take this whole entire candle and say that, if it goes up one and comes back in, it could be there. But what it's going to do is going to make your stop loss bigger. So right now, our stop is would be about 24, and I add an extra 5 to it. So that would make it about 29. And I don't want my stop to be that big. So I'm willing to take a consideration of looking at just the wick in this case. And it's only because I'm looking at this long wick and rejection. So there definitely had to be some type of battle here between buyers and sellers. And this is the lower part that I would want to pay attention to. And by doing that, if I move our limit order, it now just reduced my stop, including a spot to take care of spread, to just 14 points. So now if I target the same 1 to 5 for our first, partials, it significantly made a difference. So at this point, that's what I'm looking for to see to get involved. So let's just see what happens. All right, we tapped in right here. Happened pretty quick. And then I'm just going to let it play a little bit. Boom, boom, boom. All right, going on. Just barely missed it. Let me play a little bit more. Okay. So
you missed your entry. There's almost a scaling opportunity too on that next flip zone. Hey.
Yep.
Yeah. From here to here across. If you missed the bottom one, you obviously don't need to at this point. But
yeah. So like what I said, here was another. You could have gotten in. Well, it didn't pop. Didn't give you anything right here when it tapped into this zone, but you could have gotten in right here. Now, this is one of the things I tend to always kind of watch and say about NASDAQ. You see what I mentioned? I talked to you about market open. Market open for me is 8:30 a.m. in my time. And so at 8:30, notice how the volume just shot through the roof. The market can be a little bit uncontrollable. So I don't tend to like to get into trades right here at this time, simply because sometimes what you might see is it can throw a long wick like this and then just go straight up. So generally, as we get closer to that time, if I notice that we're within 15 minutes, I don't take new positions. And I also will just go ahead and move my stop loss to break even so that if it throws the wick or if it decides that it wants to go abruptly the opposite direction, it doesn't. In our case, it went the same way. Now, the good thing is we have two things that just happened at this point. I'm still targeting the same 4-hour high, but at this point, we just took partials for 20% on our second trade. So now both trades are break even. So now let me go back to the 15 minutes. And remember, we're still targeting this 4-hour high, which happens to also be our 15 high. So if we can hit that target, we have the first trade that would hit about 1 to 11 risk reward. The second one would hit about 1 to 14. So I'm going to let it play here on the 15-minute. And boom. All right. So both trades hit our 4-hour highs. And so now I would have closed out here on both of them. But we had one entry, like I could mention, right kind of after the London started open. And then we have our other entry here in New York. And so now what I want to go back and also look at too is I'm going to let the candles play just a little bit and see what we get. So it's making a new high. What exactly has been an opportunity for me to get involved here? And then usually we're also seeing, this is the 10 o'clock hour in my time. So this is when London starts to leave the market. We start to see a drop in volume. You can see the volume is dropping. It always gives you that high. You can go put a marker every time on 8:30 CST on every day on NASDAQ. You're always going to see a volume spike like this. So something to also keep in mind. That's why I always watch the market volume during trading hours. What do you mean by the signals on trading view? Oh, I think you mean probably alerts, right?
I wonder if he means like the bearish or bullish little thing in the bottom right that pops up if you open your window.
Notifications, yeah. So whenever I have my POIs, I just set alerts and I'll wait for them to be hit. So I'm not we're speeding up obviously because we're backtesting, but like say for instance, when we got to like right here at this point, I would, if it got to here right here to this point, then I would set an alert when it taps into the zone. Then I actually go and look at it on the 1 minute to look for it and go enter. Lowest stop. I trade also on the seconds, so I can use the stop as low as really 7 points or 10 points. But it's probably like the lowest stop that I'll use. I give myself a very generous buffer for spread. So the spread's only like 2 points, but I give myself 5 just in case it happens to spike through a zone. And it's kept me in some trades that just barely wick out and hit my stop loss, but then ultimately go in my direction. And so I'm willing to have a little bit larger stop because I know that the market will trend very well on NASDAQ. So that's something that I just kind of watched you. All right. So right now we've made basically a 4-hour high, and we've made a new 4-hour high simply because it broke this last high. Now it only broke with a wick here on the 4-hour time frame, but something I'm going to watch. I'm just going to go ahead and speed up because we're already at the end of the session, and I would have been done trading at this point. Is all right. Now we have a candle body close. So at this point, if the market pulls back, if the market is to pull back, my expectation is that we're going to play within a range of here to here. Oh, wrong tool. We're going to play within a range from here to here. So what that means is that this low point right here broke past the high with a body close. So at this point, after the market kind of settles out, this will be a new high point for me. And so the zones I'm looking to play in would be, this is where I consider demand, somewhere in demand considered in here. And I'm also going to go ahead and pull this wick in here and set this whole area here, just because I want to cover the low of the wick in case it wants to spike through. So right now, my expectation is we're coming to the end of the trading day. From an hours perspective, I'm already done trading. So now I'm expecting, I have a bias that the price is going to pull back to tap into the zone, and then price is going to go high. And if this high point doesn't break past this low point, that means this high is weak, and now I would expect this low to be strong. So I'm expected to be buying and making a new leg all the way up here. So now I have a bias going into our next day that I'm paying attention to. Does that make sense, everybody?
Yep.
All right. So now at this point, let me delete this thing. Now we have, like I said, our bias. We know exactly what we're looking to. I'm gonna go back down to our 15-minute. Price broke this high. We came up to make this point. Now, I wouldn't recommend it, but it was a trade opportunity here that you could have taken. I would have still treated this because this had broken this high. I would have treated this as a demand zone, but it's outside of our trading hours. And so outside of our trading hours, I don't try to really get into the market. You really want to get into it when there's the highest volume. I think if I remember correctly, there was some news that came out during that day. I can't remember at the moment, but this is partially the reason why we saw such a spike in volume. NASDAQ does tend to move though, and sometimes in the afternoon, generally when there's news releases. So things that might come out, for instance, are FOMC minutes. There might be one of the FOMC members speaking, and they might have like some type of a press release or something. And at the same time, there also sometimes are just like random kind of events that are having news related into the market, because the NASDAQ is a stock indice. So stock market moves is pretty busy between 8 a.m. Eastern Standard Time, which for me is 7 a.m., all the way until about 3 p.m. Central Standard Time. So sometimes, odd cases, I can find an entry. And so, for instance, I'll just go back. Let me go back and just show y'all the entry really quick so that y'all just can be able to see. But price tapped into a previous demand zone. And generally speaking, well, this is our first time that we saw this tap. I know that the market is strong. I know that it's still bullish momentum at this point. So I'm looking down here to see if there's anything that gives me any kind of reason for me to get in. And okay, at this point, what I was looking for it to break is this point right here. I could take these dojis, but like I said, I like to see it opposite candle. That's just from my back testing. What I've tended to find that works best for me. So if it breaks this right here, I'm looking for it to be a change character. Also, I want to pay attention if it breaks this low at the same time. If it breaks that low and gives us a new low, then I have a new place for my change character to pay attention to. Okay, so it did break here on this high. So now at this point, I'm delete this. And if I wanted to get in here for a trade, I'm going to be generous and pull the low of this wick to the high of that wick and treat it more like a range-based demand. It's a pretty wide zone, but it's okay because, you know, I'm thinking about the time that we're trading as well too. It's very late in the day. So this is not something I generally would recommend. So it's going to go against some of my stop loss rules. So it's going to be a little bit larger stop just to cover a little bit more than spread. And let's see what we get. All right. New flip zone created. Pay attention here. So we have BOS. So I'm going to take this hold zone and do the same thing here, taking the low this way to the high of this and treat it like a range-based demand instead of just a single candle. And all right, it would have tapped us in, but also would have taken us out. This is why I tend to go about 5 more. So this would have been 30. It still would have taken us out in this trade. So this would have been a -1R. But then you start seeing price goes right in our direction. So this is why I tend to say I generally try to take a bigger stop than just covering just the spread, because it will tend to do wick outs like this. But this would have been put this down, -1R. This one, and we still haven't. It barely tapped in. I mean, barely missed, but it almost tapped in right here into this lower zone that we could have picked. But it's okay. We'll see what else the market gives. So right now we've already created yet another flip zone. So it broke this high. And so now the next area that I would pull would be, I would take it from it's really kind of encompasses both, but I would take it something like this into this type of zone. Let me do this too. All right. So now, let me see. So still pretty wide, 28.9. So this would be about 32.9. We'll just say 33.7. That's fine. All right. Let's go. Let's see what happens. All right. We're going to tap in right here. Still 1 to 5 is for the first target. And we're barely kept in, thankfully, for having a little bit larger than a normal stop. And price rewarded us by hitting our first target. Now, this is on at what is 2:30 for me. So this is literally the end of the day. So at this point, I got 2 options. It's already gone past our last 4-hour high, which is this green line right here. At this point, I would have probably just closed out my trade. So I would have just taken profit here, but the market would have gone on a little bit longer without me, which I'm okay with. Because at this point, we're at days in, and we would have already had 2 really successful winning trades, and we'd have 1 loss, and then we have this trade. So I do not fantasize about the things that happen in the market after I extract my profits, because the most important thing to me is consistently extracting profits. If it goes on for 100R, great. As long as I extracted any kind of money, I'm pretty much happy, because there's another day, another trade. And that's how I always kind of approach the market. So at this point, we're going to go back to our 15 minutes and our 4-hour. So 15 minutes, this is where I think it passed over. Oh, no, it just barely came into it. All right. So at this point, this is the Asian market again. After the market closes at UTC, you got to wait like an hour before you can get back into trades if you want to do anything in the Asian market. I tend to not pay attention to the Asian market or Asian. Sometimes it can give you some good trades. So for instance, let me see if I can mark out one. So at this point, going back to our 4-hour, remember, this is where I mentioned to y'all we had a body close. So my bias from a 4-hour perspective is that price is going to come down and do something like this. So that's the kind of bias that I have. So if I'm looking on the 15-minute, right now, we have something that I could kind of use as a reason for me to get entered during the Asian. The reason why I say that is because right here, we had some type of demand that allowed a break above this high. And so that means that this area right here would be considered to me a supply zone, because it had to have enough supply to break down with a wick. So I'm going to go ahead and put a zone right here, and let's see what we can get. And this also would be where I put notifications as well too. So to see if like it comes into my area. All right. So we had another break here, but it didn't actually give us any reason for entry to tap into the zone. Let me see if it gave us something on 10-minute. No. I generally like to cycle through time frames if I can't see a clear POI, like I can on the 15 minutes. And there isn't really anything that could have got me involved in that so far. So at this point, it's an area to consider. But remember, our trend, we're in a short-term pullback from the 4 hours. So it's not going to go too much farther down, but it was just something to see if I could get involved during the Asian session. So right now, we're still in the Asian. And what time is it? Oh. This for me, wrong one. This for me is the London Open. So I'm gonna go ahead and speed up to it and see it broke right through the zone. So good thing we didn't get involved in there. So go ahead and delete that zone. All right. And so now we are at the London Open. So cycle through our time frames. Still keeping the same. So now I see going back to the 4 hour, because you always got to start higher time frames. So every time I start the day, I always start by looking at the 4 hour. All right. So 4 hours throwing a bunch of wicks. We see wicks. It already made a new high. So I don't try to predict the market, try to call tops and bottoms, but this is an area where we can basically consider possibly this could be the new high right here. So I'm gonna go back down to our 15 minutes. And on our 15 minutes, I'm looking for where do I want to see my chop. Could use this doji. Let's see. I'll hop down to 10 minutes, see if I see anything. I don't see anything on 10. I don't see anything earlier, really, outside of this on 11, 12 minutes. What I'm looking for is I'm just looking to see, like right now, if I go on my 15 minute, my chalk that I'm looking for to kind of break is right here. And I'm looking through these other time frames to see if I see any other POIs that I may have missed. And so far, it doesn't look like I missed anything. So I'm gonna go ahead and keep this level as the place where I want to see it broken. It came really close and just barely missed it from wick. All right, so now we've had it break. Now at this point, it's time for me to find my POI. And so I know this is my chalk.
Hey Brian, can you explain a little bit why you made that chalk again? Why you wouldn't put it on that engulfing candle also?
So the reason why is because I look for it to break this high, which it did, and I'm looking to see where do I see demand. I don't use like the dojis like this simply because I'm looking at the wicks and there wasn't like a lower wick. So when I look at the wicks, I want to see this wick, for instance, right here, had been lower than the one before it to show that there was something that it had to break. Because my 3 rules for POIs is that I want to find areas that have strong movements. I want to find areas that break some type of structure, meaning wicks or actual body breaks. And I also want to see quick moves. So I want it to be a strong move upward. So from this candle, I got a lot of strong body candles. It was a quick move, but from this also, it broke this previous high. So that's why I considered this to be my area. So this is a chalk based upon supply and demand. Make sense?
Yep, thank you.
Awesome. So at this point, we're going down. And right now, just gonna let it play out a little bit. All right. So we've made a strong leg down. And now remember, I didn't want to call tops and bottoms on the 4-hour because I don't predict, I just react. And so we still have a strong movement coming down. So at this point, I'm thinking, all right, this is the beginning of showing that there probably was a supply. And if I go back and look previously, here was a supply zone that price tapped into. It did wick above it, but it's probably the 4-hour supply that means that this is my 4-hour high, and it's now going down to basically create a 4-hour higher low. So I've got multiple confluence factors that's going to give me confidence that I can start selling. So now,
pip wise, Brian, is that wick bigger than the body on the 4-hour? It's kind of hard to tell on your screen. So I always kind of look to see if the body or the wick itself is bigger.
The wick seems bigger than the body. I'd still take the whole thing because I know that there's some type of interaction there. That's how I kind of look at it when I think about what happens in a doji. Because essentially, a doji on a lower time frame means that there's like one bullish candle and one bearish candle is probably about the same size on that are right next to each other. So I take it as the whole zone. Better to get more trade ideas than less, because if you refine it too much, you can get missed by pips, which tends to happen almost daily. So at this point, I got a whole little leg here. I haven't really confirmed my pullback just yet.
What time frame are you on right now, Brian? I think my screen froze. I'm wondering if it's just me or not.
On the 15-minute.
Okay, I'm still on the 4-hour on my screen.
Yeah, it's frozen.
Oh, wow. Let me stop the screen share and turn it back on. Okay, guys. Hurry, just restart it. Zoom really quick. No, not that one. Where is my... Oh, there it is. Okay. Can y'all see my screen?
Yes, sir.
All right, cool. All right, so haven't confirmed my pullback just yet. I'm looking to see another candle in the opposite direction. All right, cool. So now I would consider that we have a whole leg like right here. So this pretty much is like a leg. And so now I'm looking for it. I'm thinking that price is probably going to pull back since it made a strong move down somewhere in this region. We know that here is our, here's our 40 to 60. That's our relative equilibrium. Right now, we're in our premium price. Now, pretty much in our discount zone. We want to sell here in our premium price. So I'm looking for something in this area. So I need basically a reason. I see a lot of things happening with wicks, like this wick being lower than this wick and then price comes down. So there's something in this region. So now I'm gonna cycle through my time frames because I don't see something clear on the 15-minute that I can pull. So I went to 14, don't see anything. On 13, I got some interesting. So here I have this whole little region. It was that same area that I was just telling you about that I was considering. So I'm gonna go ahead and mark this supply from 13-minute. I also have something here in relative equilibrium. I'm in relative equilibrium, so I just need to pay attention to that. So I'm gonna lock that in. And then I have this other one, but I'm not gonna take that one specifically since I got two zones right back to back. I want to really sell from one of these higher spots. And so I can go down to 12 to see if I can refine anything. I don't see anything really here outside of something that we already covered. Go down to 11-minute. It's about the same that we saw from the 13. Go to 10. Nothing new. So I got my two areas that I'm watching now that I want to see price tap into. So at this point, I want to pull back, wait for something to pull back into one of these two areas. So I'm going to speed up really quick. And okay, we got our first tap in right here. So right now, just time wise, we're about 45 minutes away from the market open because the market opens at 8:30 Central Standard Time for me. So I'm gonna put a line here. This is And this is what I was talking about when I said, like, I kind of pay attention to those things because market will move violently during that time. So I don't generally like to take positions, but I'm just going to watch and see what we have on the 1 minute. So right now we have, this is what I would consider a demand zone. It definitely broke through and went higher, and it was a quick move. And then we see it making some tops here with the wicks. So at this point, I would actually I'd consider selling if price comes back here and it taps into, I'm taking the bottom of this wick to the top of this wick because I'm paying attention to what the wicks show. And so I could put me a sell order right here. So now it's at 7 points. So I'm gonna add 8 points. I'm gonna add 5 to it. So give us about a 13.1 point stop, 13.2, close enough. And so I'm going to do our first target at 1 to 5 R. So let's see what we get. All right. Price is near market open. Hold on a second, guys. Sorry. I'm trying to pull up my windows. All right. Now, we're only a couple of minutes away from market open, so let's see what the market open does for us. Now, look at these candles and look at how small they are compared to the market open. Volume shoots to the roof. We get a large engulfing candle. At this point, I really wouldn't want to have this order placed. I'm going to leave it on just to see what happens, but I'm definitely not putting the order. I would not have left the order on at this point. I would have actually just canceled the order. So let's see what happens. All right, we get tapped in. Make this a little bit larger. Okay, we get tapped in right here. So let's see what happens. We were in profit. Roughly, we're up about 3 R. And literally, the market went straight through our trade and straight through our stop loss. The first 30 minutes from the market open, the market tends to move violently. I will wait to take any positions until after that because for reasons just like this. I mean, look at all that bullish momentum. And price is still tapping into our zone and price is still going higher. Now we've actually disrespected that supply zone that I mentioned. So at this point, I'm actually going to wait until price taps into this 13-minute zone that we have here. And this is something that I would consider a place for us to be able to enter. So let's see what happens. All right, 15-minute comes close, and boom, we got to tap into our higher 13-minute zone. Because like I mentioned, this one's respected. Now, it hasn't closed with a body yet, but I like my chances here that it disrespected this zone, which means the zone really wasn't holding because it also disrespected it twice. So the good thing is we're tapping into a fresh zone. I feel more comfortable now looking for sales. All right. So what do we get? All right. From a 1 minute perspective, we have the market came and made a wick right above, and it also came through and wicked right below. So at this point, we have a chalk that we can use. And I am going to order. Now, at this point, we have large wicks that are throwing in different directions. So, okay. Large wicks being thrown in different directions. So I'm going to take our order from the top of these wicks. That's where I really want to see and get involved. So let's see what happens. Do we get a tap in? We get more than a tap in. We get a whole candle through. All right. So at this point, we're in the order. And my stop would be covering this high. So we got 12.9. So I'm going to put about 17.9. And so then our, what's it called, would come down to our first target would be right here. And so it's all in the wicks. So what ended up happening was price came above this high which means that for it to wick above, there had to have been some demand. So these candles right here would be your demand zone that pushed it above. That's why the demand failed. And then, well, this is the demand that created, that broke through this last kind of higher spot. And then price came down from this high and broke through the wick. So that was our demand failure. All right. And so now let's see what happens. Woo-wee. This is why I do not put my stops right here, because with spread, I would have been taken out. But the good thing was we had our spreads a little bit higher. We had our stop a little bit higher, and we covered even more than spread. So we stay in this trade. That's the exact reason why I do that. So we're going to keep it pretty much right there. So let's see what happens. We're close. Boom. All right. We've hit our first target. So now here's something to keep in mind, guys. Let's go back to our 4 hour. Remember, we're thinking that price is going to go down. So that's our expectation based upon what we can see. Going to our 15-minute, the low that I really want to target from a 15-minute standpoint is going to be here. So this would be our take profit from a 15-minute. And then we have what I would target from a 4 hour perspective would be that zone down there. So because I'm expecting price to bounce in here and to go up. So let me go back to the 1 minute. At this point, first trade, if we took this loss, I want to go ahead and take 80% off and then leave the rest for a runner to go to at least a 15-minute low. So I am going to take
Brian.
80%. Yep.
Can I ask you a question? Do you see on the NASDAQ, do you find that it goes to the extremes more than the decisionals?
It tends to, definitely. It likes to pull back. So
Awesome.
decisionals oftentimes fails. And that's the reason why I pointed out to y'all with premium and discount pricing, because if you notice, this was a relative equilibrium, the zone that we disrespected and went through. This was the zone that was more in the premium nature and more of an extreme zone. And you see that it tapped through, ran through it, and then just pushed through it. And then eventually now we're having our move downward. So I've gotten bitten many times by taking decisional zones, but I tend to find that if you find stuff that's just better price overall, you'll be on the right side of the market more times than not, especially how we built this narrative. So, all right, so we're taking partials, leave rest for 15-minute runner. All right, and so let me go ahead and drag this really quick to my 15-minute low. Boom, boom, boom. All right, so check, it'd be like a 1 to 10. And so at this point, we've covered for this loss that we would have taken if we would have left the order on. We've gotten credit, from the market today. So we got money in the market. That's the most important thing. So if it hits 15-minute take profit, that'd be great. If not, we can go down to even. We can hopefully, get it to go even lower than that. So let's just see what happens. I'm gonna let it play out. Really corrective behavior, really consolidation behavior. So it's something to pay attention to. Usually when I see signs like this is a sign to possibly get out the market and just go ahead and close. But the good thing is we've already taken partial, so I'm not as concerned at this point about what will happen with the rest of the trade. So let's just see what we get. All right, market is moving backward, upward. That's not going the direction we want it to go to. But bam, what did it do? It hit our take profit on the low. So I guess we end up having a pretty good trade. So now we've hit our take profit. Now I want to go back to our 15-minute and see what we got. So the market, we've hit our 10R, and we've still got a ways to go from this low. Now it did wick below right here. So it hit our 15-minute take profit. It wicked below. So now, to me, there's supply right here in this little zone. So we're going to see if the market gives us a chance to get involved here, since it went ahead and broke through. And just for giggles, if y'all are curious, let's say we had taken 2 orders, or decide we keep the 4-hour target. I'm gonna leave an order on just to show y'all what would happen if we target the 4-hour. So where is the, oh, there it is. All right. So we're watching for 15 minutes to see if it gives us anything. It broke down a little bit lower, so it would have kept going. And we still haven't got it. All right, so it broke through. Now, this order, you can leave this zone on. That's fine. I would have still left on zone alert, but now we have a new zone to pay attention to. So the market broke through this low right here. And remember, we're still expecting from a 4-hour standpoint, price to come down to this 4-hour low. So it broke through and pushed down through right here, which means that I believe there is supply right here. So we got a 15-minute supply to pay attention to. If price taps back into it, so the price ends up going, for instance, somewhere right here, my expectation is that the market's going to go down. Now, we're already past, I believe, yeah, we're past trading hours. We're past our kill zone hours. This is 12 o'clock, 12:15 today, which for y'all is like 6 p.m. UTC. So as I'm looking at volume's holding pretty steady. Sure, Biden or Powell said something to keep everything going. So at this point, if price taps into it, I would take a trade. I could take a trade, but remember, this is also outside of our hours that we really want to be trading. So it's something that we can look into and see if we can find any things, but I don't highly recommend trading these hours. So keep in mind that there's more risk involved already in the market. So we're going to see if price comes into, all right, taps in, cool. Let's go down to the 1 minute and see what we got. Time-wise, we're at 1:30 Central Standard Time. All right, so we're down to our 1 minute. And what I would consider demand would be this spot right here. So if it comes past here, that's a chalk for me. Why? It broke this high. It had strong bodied movement, and it was a quick movement. One candle, it broke through and did something some more. So at this point, that's what I'm just going to be watching for to see if it gives me anything really that, you know, I can get involved with. So let's see what happens. All right. It chalks through. We got a couple of spots I can pay attention to. I would take a look right here at this area. Keep in mind, we're still at the tail end of the day. So I can put an order here and see if it decides to come through. Now, we got a couple of zones because there's this zone, there's that first zone, and this other zone. So I really would like to move it up because, like I said, it tends to move pretty violently. So I like to get it, for it to come into most of my extreme zones. And I pay attention to that even from a 1 minute perspective. So here we have a 1 to 5. So that's 13. I'm going to add 5 to that. So that's going to give me 18.9 would be my stop. Close enough. Target a 1 to 5. Let's see what 1 to 5 now. All right, cool. And let's see what we get. So price goes down. Price is coming up. Look how strong it's coming up compared to how it kind of came down. We're seeing bigger candles. So boom, tapped in through. If you had our stop right here, we would have been entered and taken out at the same time. So right now we're at like 18.9. Let's see what happens. Well, didn't matter. It went right through. Now, this is the reason why I kept saying earlier, hey, you have to pay attention to the times that you're trading. So this is outside of the premium hours that I want to move the market. And if I look at the 15-minute, volume is still strong, but you can see that volume has been declining ever since it made this explosive move down. Now, if you had kept that order going down that we had first talked about and target the 4-hour lows, you know, they had a target of 1 to 20 R, and you would have just eaten this one loss. We still took profit from our other position, so we had the runner that went to our 15-minute target. So it kind of eats this one R loss anyway. So in both ways, we're covered. But I don't recommend trading outside those kind of prime hours. So let's see what we get. All right, here's something to pay attention to. Now, I've mentioned multiple times, I talk about the fact that I want to see like opposite colored candles. I really want to see that interaction, and that gives me more confidence in a zone being strong or not. But the other thing that I also pay attention to is the wicks. So you have this wick high, that wick lower, and then you have that wick higher. So essentially, on a lower time frame, there was a type of interaction. So if price ends up coming past this low, I would put, and let's see if that happens first. All right, it did. So price can end up coming past this low for me. Well, really, it's kind of hard because this is definitely a second century, but I'm gonna play it off of this low.
I would enter that on the engulfing candle, though. I'd definitely short that.
I'm looking, if it comes back into this region, I'm getting in, which it pops me in. And so, especially like Rob mentioned, it's an engulfing candle. We got strong wicks to the high. Strong wicks to the high means something is pressing up against something. I mean, you could come back here and say this is a 1 minute unmitigated zone. And so it's not exactly a risk entry because there's something in these wicks that are happening on a lower time frame that I can pay attention to. So I'm gonna cover the high of this wick. So that's 12.0. I'm just gonna go to 17 just to make it easy. And time wise, we're still at 2 p.m. So I still got 2 hours until the market changeover. Here's my 1 to 5 right here. So let's see what happens.
Strong. Now, if you missed the first entry, you definitely enter on that. You just have to have a little bigger stop.
Mm-hmm. And so what we get, boom. Well, dang, it barely missed. So it barely misses. Come on, push this. All right, push this through. All right, cool. So we've taken 1 to 5. Right now we're at 2:30. We got 30 minutes until, well, 2 hours and about 30 minutes until the market closes. But let's take a look back on our 15-minute to make decisions. All right. We still got this 4-hour low, which at this point, the market seems to make a strong move down, corrective move. I'm looking at the candles. Look at these engulfing candles. There's definitely more momentum to push it down. So at this point, what I'm actually going to do is I'm going to target this 4-hour low. And that would put me at basically a 1 to 12 R. So at this point, what we're going to do, since we've hit our 5 R, is I'm just going to cover. I am just going to take 20% partials and leave the stock open. All right. And I'm gonna go back to the 15-minute time frame, and I'm just gonna let it play. Did we get taken out? No, we didn't get taken out. And all right, price took us out. It got really close to coming into the zone, but it just barely missed. So this is actually around the time right here would have been London Open. Right here would have been London Open. You could have taken profits because you had a nice floating profit, but this is the kind of gamble that you play, especially because we're knowing that we're going counter trend. So I wanted to show you an example of a counter trend that we could have possibly, hopefully, hit a 4-hour target, but it probably reacted on something on the 1 hour. And so even though we target the 4-hour, it does tend to work, but in a counter trend example, it's less likely and less probabilistic. But the safest target would have been taking say for instance, maybe 10R and just letting it go down because we did have strong momentum on our side. It just didn't come all the way to our take profit target, which sometimes we have to look and see, is our take profit even realistic? So now we're on the 15-minute time frame, and we've also crossed into a new day. So I want to make sure, let me stop to make sure answer any questions. Yeah, Joel. The strategies, when you pull all the strategies together, Joel, it can make you really, really profitable. And you can see it's taking into account things like times, things like volumes and candle sizes, and also, supply and demand. It works for pretty much any kind of financial instrument out there, from stock indices to currency pairs to even crypto. So it's all just applying the same concepts in a systematic way that you can make it be profitable for you. Can you check 15-minute? I'm on 15-minute right now. So this is our 15-minute time frame. Any other questions that y'all guys have? Let me know in the chats.
Yeah, I was wondering about one entry. Could you go to maybe 1 minute and look here in that zone? Yeah, so I was wondering about here, but I saw that you took this POI on 15 minutes. I thought that you only took the VIX here. Sorry.
I tend to always pull the body and the wick. So at this point, I didn't pull, like, for instance, this entire candle. I pulled it to refine it to the last buy candle before we sold. And then I also pulled the wicks too, because I know that there's an interaction there within the wicks.
Okay, because I thought that I didn't see anything here, like only these things. I only focused on this and didn't see this body. So I thought that that cell wasn't in the POI, so I was thinking what's happening there. And just to check on higher time frames, I see that there is like a candle and body like a wick. So yeah, okay, that's it.
Awesome. What other questions y'all have?
Okay.
Don't be shy, guys. Anybody, if you have any questions, feel free to turn off the mute of your mic, or feel free to ask in the chat.
Yeah, maybe you could say when you start the trading day, do you mark all the POIs of, let's say, last week? So for example, for tomorrow, you will mark for hourly for the last week.
I won't exactly mark every POI, but what I'm gonna look for is I'm gonna look at 4 hour. I'm gonna try to see what does my 4 hour bias tell me. And so I'm trying to get an understanding of bias of the direction, because we're either impulsive on 4 hour or we're corrective. So I got to know my market structure. I got to know what wave we're in. So yes, this is an uptrend, but at this point, the market is coming down to retrace to then make an impulsive move to go up. And so then once I know that, I'm identifying my zones or areas where I expect price to tap into, and I'm waiting for it to see if it just reaches those. And then I do the same thing with 15-minute. So knowing where we are, I look at 15 minutes to see, all right, where's the flow of orders going? Because I know my 4 hour direction, and I know 15-minute. It's either if for instance, let's say for instance, we're in an uptrend, right? And if the 4 hour is in an uptrend, then that means on 15-minute, depending on what leg that we're on, I know that on the impulsive move on a 15-minute, that's going to look like an uptrend. So I already know what I'm going to expect on the 15-minute. When we're moving correctively on 4 hour, that means 15-minute is going to be in a downtrend. And I'm always looking when we get to these points where if the 4 hour is going to make a new higher low, I'm looking for our reversal on the 15-minute to give me reasons to get into buy. And I just follow it. So it's following everything from expectational order flow to understanding about market structure to understanding to making sure to taking trades along with the trend and using everything like our chalks. But if you noticed, every day I started on the 4 hour. I got a directional bias, then I moved to 15-minute, and I looked for my entries on 15-minute, and then I looked at an M1. I don't look at M1 unless I have an area where price is tapped into. Because if you sit on M1 all day, you're going to have a lot of confusion. More importantly,
Yeah, for sure.
So,
cool.
What the questions y'all guys have?
So is this the way you go into the live markets with this mentality?
Same way, every day, Monday through Friday. Would be Saturday and Sunday if they actually had markets open.
They do on cryptos, I think.
Yeah, but you can find enough opportunity with just these pairs during the week. And honestly, I'm gonna start eventually in the next 3 months. I'm gonna take Fridays out of my trading day and let that be a day off. So I'll only trade Monday through Thursday, just because that's a decision of a lifestyle that I've always wanted. So, but it's the same mentality, the same process every single day. Show the chart. Yeah. So give me 1 second. So here I'm going back to that 1 minute time frame. So the chalk was all based upon the wicks. It wasn't based on the bodies. So this wick came lower than this wick. So therefore, at that point, it broke the high, and I treated it that if it came down here and broke this low, that I would get into the market. But it's hard to see on the 1 minute. It was definitely a seconds entry, but I would have taken that on the seconds all day. But I pay attention to the wicks to see if this wick is higher than this wick, and then price goes even higher than both of them, then that means that this is a source of demand for the market.
So one more thing. I always have a problem with trading on Mondays because the markets are pretty slow sometimes. It doesn't move a lot. Like, do you think it's a good idea to take Mondays off, for example, instead of Fridays?
It's up to you. To be honest, I can tell when the volume on Fridays tends to dial down. On Mondays, I had a mental block that I used to think that Mondays were actually a worse trading day. And after I took my time, realized I had made that in my head, because Mondays actually ended up becoming a profitable day when I just started getting into my head and start putting those self-limiting beliefs. So personally, I just decided that I wanted my Fridays to be that way. Sometimes I do like the idea of trading Tuesday through Friday. And it's usually because Monday, it's just harder for me to get into the groove of things. But I think if you approach it with a different mindset, that Mondays are a good day, you'll end up having a good day, because that's what it literally took for me.
So let's say last week was NFP, non-farm news. So what I used to notice that the next Monday is always a reset of the market if it moves a lot. Do you look at these things, for example, when you trade?
I mean, I keep in mind, like, NFP is going to news doesn't really change direction that much. It may cause a pullback, but then market's going to go exactly where it was going to go prior to. So I don't trade news, but I definitely see the effects of it. So it may, for instance, accelerate and have the price go even further in my direction, or it might pull back, and if price was going in the direction that it was going to go, it still continues. And I've just seen that time and time again from backtesting, looking at chart for multiple years. News really doesn't change direction like people think it does. So I don't trade it, but I'll wait for a while after it, and then if I see a clear opportunity, I take it.
Okay, thanks.
Any other questions, guys? All right. Well, I gave y'all a lot to kind of chew on. I know it was only 2 days worth of trading, but I wanted to at least show y'all process-wise. So we'll do some more back testing of NASDAQ, but I'm going to go ahead and give some of y'all's evenings, some of y'all's afternoons, and whatever other time frames that I missed in between. Don't charge it to my head. So thank you, everybody for joining on this back testing session, and we'll see you in the Discord.
Thank you, Brian.
Thanks, Brian.